focus on the one. So the asset side, the right dollar, right time. How do we go through this? How do we think about this? If we have some like cash, 529s, brokerage accounts. So the idea here is don't keep your emergency fund. Don't spend that. That's not for college. That's for other emergencies that might come up. So make sure you're understanding that you want to keep that piece in place. I'll walk through an example on brokerage accounts and how that might have impacted taxes. You got to be careful about selling them because of capital gains. So I'll walk through a strategy there, but that make sure you understand what the tax consequence is before you do the distribution. I guess that's the big one. Some people also leverage brokerage accounts and do some security lending in there. That's pretty sophisticated, but it is things that some people choose to do. But understand if you take that and you get a capital gain, raises income. So if you're a financial aid candidate, you got to be careful about not tipping those too high for people or for your tax bill because could reduce your financial aid in future years. So that's a thing to be aware of. I'm going to spend quite a bit of time on 529s here because that's our predominant savings vehicle. And then when cash flow, I'm going to hit through tuition payment plans. So, but cash, if you think about, I'm going to hit that in a second. I won't hit it there. So the 529 plan, we've accumulated in there. Hopefully it's saved. It's earned interest or investment gains on a tax-free basis. And as long as we distribute them for qualified higher education expenses, it'll be a tax-free distribution. So we talk about what's qualified. These days, it's pretty much everything but transportation. So it's very broad what it can cover. So it's tuition, room, board, books, fees, anything that's required by the school that you need to have to go to that school is a qualifying expense. So, they're listed out there, but computers got added to the list years ago, but initially they weren't. People are like, well, everybody needs a computer for college now. So that's on the list. Special needs services, that's something that I've gotten questions on over the years, and those are additional costs. And if they're for college and you need those services on campus, you can absolutely use 529 plans for them. So that's an important thing to note. A couple nuanced things those are qualified expenses. Like I kind of call them quasi-qualified, and what that is when if you get a scholarship, you can actually take your distribution out and not pay the penalty. Now, whenever you take a distribution and it's not qualified, you're going to pay taxes on the growth. And if it's not qualified and there's nothing else, you'll pay a 10% penalty in addition to that. So when you take that out, it's always pro rata. So how much did you put in? That's called basis. So if you put in 10,000 and it's worth 20,000, then 100. If you took out $1,000, half would be return of what you put in, and half would be considered growth. And if it's not qualified, you'll pay taxes and a 10% penalty. So you don't want to do that. But if you have a scholarship, you can avoid that 10% penalty. So understanding that's something it's pretty nice. So you'll have a small tax on the growth, but if that money was for college and somebody gets a full ride, just know that you can use the money, you can access that money and not pay the penalty. So important thing to know about. Okay, so the next one is how do we? So a couple things on um, uh, tax credit. So there's a tax credit called the American Opportunity Tax Credit, which I'll come back to in a little more detail. But the key is that you need to coordinate that with 529 because they consider it double dipping into tax benefits. So you want to use $4,000 of non 529 to make sure you get the full American Opportunity Tax Credit. So it kind of lines out how it works, but that's so you could use cash flow, even loans qualify. A lot of people have that question. So even if your student even takes out the federal direct loan, that can qualify for the $4,000 spent on education. So pretty easy to, not easy, but you can get around it. Make sure you get that tax credit if you're eligible, which I'll uh, go through those here in a second. What makes you eligible or not. And then so payment methods. A lot of people haven't distributed from these funds before. So there's two ways essentially, really three, I guess. But with the easiest one and the one that keeps it the easiest for you is paying it directly to the school. So anything that's directly billed from the school that they can take, that's the easiest way to send it directly to them. And most 529 plans actually have the ability is to send that direct to an institution, like they do that. They send it to them on your behalf. Some of them send a check, some of them it's electronic, but most major schools have that set up with 529 plans across the country because they like to get paid. And that's an easy way to do it. So they do kind of the administration, keeps it easy for you. And then the other way is you can either pay it to the beneficiary or you can pay it to yourself if you're the parent that owns it. You do want to keep records on if you do that, because you have to track it. And it's really, I don't say on the honor system. The only time it's going to come up is if you're audited. So if there's a question and there's an audit, you need to have a paper trail with your taxes for that year that shows that in the year I had the expense I distributed. So where this comes into play usually is when you have off-campus housing. So, you're going to pay it, pay the bill, however, or get the funds ahead of time and then pay it. But that's usually when that comes into play when they're moving off campus. And that's totally fine. You can take out from the plan as much as they would have charged you on campus. So they've kind of restructured. We all consider it room and board, but it's like room and meals now are a little separate. But anything that's on that cost of attendance sheet, which will show, is you can go up to that cost of attendance for that. And so I guess the reason I'm saying that is that you can't go get like a, $15,000 a month apartment in Manhattan and pay for it out of 529. You can't do that. So it's just up to what they would charge you. So just be aware of that as you're doing those distributions. And then the last one I can't stress enough is make sure you do the distribution in the same year as the expense because the academic year and the tax year are different, right? So we have a 26, 27 academic years coming up, and we just ended 25 taxes. We're getting 26, so you have to make sure that your expense is in the year that you pull the funds. So that has to match up. So keep that in mind. I don't think I'm missing anything. Those are the biggies. So, again, taking that money out, that caveat about if you're eligible for the opportunity tax credit is a big one. Direct to the institutions preferred, and make sure you get the timing right. So, a couple